Hi, my name's Lee Hopperton. I'm the Chief Investment Officer for Future Generation, and I'm joined today by Gabriel Radzyminski, who is the Managing Director of Sandon Capital. He's also a pro bono board member and investment committee member of Future Generation Australia and has been since it started back in 2014. Thanks very much for joining me today,
Good
Gabriel.
to be here.
Would you mind giving us an outline of what the role of the investment committee is for Future Generation Australia?
Well, the eight of us, we've all got sort of diverse background. There's a few fund managers, there's a few asset consultants and a few other people with lots of experience in markets. And what we're doing is effectively overseeing the portfolio of Future Gen Australia. The things that we do involve selecting the managers who are invested in the portfolio, monitoring them, and generally just trying to keep ourselves across what's happening in the portfolio, and more importantly, what we think the future prospects might be like.
And when looking for a new fund manager, what sort of things are you looking for?
Look, we're trying to build a portfolio of what we believe are the best managers out there. We're trying to assess, when we make those assessments, there's some objective assessments, there's some subjective ones. The objective ones is looking, although past performance is never a predictor of future returns, it's always good to understand how managers have performed in the past, to understand how their philosophy aligns with the results they deliver. What we also then do is form views on the people. Ultimately, asset management, funds management for the most part, particularly active management, is a people business, and you want to ensure that the people that you might invest with are the right people who have the necessary skills. We're also looking for people with credibility. That comes often from experience. So for us, they're all the factors that we're looking at. We also then have a look at, we may have identified a really good manager, and this has happened over the years where we've identified a good manager but we haven't decided that it's the right time to do something. Could simply be because we think that their approach might be better at some point in the future. Often it's because we actually just don't have the spare cash. But what we're trying to do is work out how a new investment will fit in with the existing portfolio so that we can sort of ensure that we're doing our best to meet the objectives of the company, which is that long-term, less volatile approach to building value over time.
And volatility is quite topical right now.
That's an understatement.
Future Generation Australia had a great year in 2025. How does the committee think about the balance of risk and return?
Look, that balance of risk and return is critical. And at least from my perspective, I think it's worth noting that I don't necessarily consider volatility to be risk. For me, risk is where you take the risk of permanently impairing your capital, permanently losing money. Volatility is simply the turbulence that you go through and that you have to endure while you are trying to build long-term returns. So absolutely, lots of volatility at the moment. It's probably one of the most volatile periods we've had in recent times, but perhaps even more challenging is the fact that it is so unpredictable. I mean, things are generally unpredictable. I mean, no one can foretell the future. But right now, particularly with the geopolitics, the things that are happening are just buffeting markets around the world, and often in ways that are not what people have expected. For example, recently we had a situation where, world's in turmoil. The orthodoxy would suggest that gold should go up. And yet in recent weeks we saw the price of gold go down. So for a lot of people it left them scratching their heads. And that's not to say that we've necessarily taken views on gold in our portfolio, but I'm just giving an example of where things are so frustratingly difficult at the moment.
So long-term thinking is an important part of it.
Yeah, and look, for me, and I've gone through this over a number of instances in my career, GFC, COVID, and many other instances before. And the one thing that I keep coming back to is that no matter how bad things might feel, and I say feel because that's often what it's about, is how you feel. No matter how bad things might feel or seem to be, the reality is at some point things do go back to normal. May not be the same normal as it was before. It's always a bit different, but things do get back to normal. And I think that's an important message to keep reminding yourself when you're dealing in times like this, is that there is a point at which things will go back to some normalcy. No one knows when that will be. And I think one of the challenges in situations like this is where people feel anxious, and that anxiety and that anxiousness causes them to want to step away from markets. The problem is that once the market volatility has emerged, it's often, it's possibly too late to make those decisions. And so I think that's why it's important to just focus on long-term investing. The way the portfolio for FutureGen is built is we've got different managers that have different strategies and different approaches. And so in very simple terms, we've got some managers who are exceptionally good at trading their they've got exceptionally good short-term trading skills. They have a nous for taking advantage of shorter-term opportunities. But we've also got other managers who are very focused on long-term, where they are almost not blinking at what's happening right now. There'd be some guys in their offices who I imagine are frantically trading markets at the moment. That's what they're good at, and that's what we want from them. There are others who, if you ask them, where the market was at this point in time, they'd probably have to look up a screen because they're not paying attention to that short-term fluctuation, instead focused on long-term prospects for the businesses that they're invested in.
Yeah, that diversification is really, really important. Gabriel, thanks very much for joining us today, and thank you all for watching. If you would like more information, there's plenty on our website, or feel free, please, to get in contact. We're always keen to speak to our shareholders. Thank you.